McQuire joins us now. Peter, good morning. Thank you for joining us. India and Australia soon would be playing at the World Cup, and I know you're supporting India this time, right?
Well,
Yes,
well,
it's
good
okay, it's
morning.
okay. The better team will win. It's okay.
I'll say yes, but don't tell any Australians.
What is OPEC thinking? I mean, are they running scared that demand is going to get crushed, that they've cut output by 2 million barrels per day? This is the highest cut we've seen after 2020 when COVID happened.
Yes, I mean it's taken everyone, I think, by surprise. I think we'd probably baked in 1 million barrels, and that was more or less hand on heart saying yes, we'll take the million. But now to come out OPEC plus with 2 million, that really does not bear the good news for the consumer. And naturally, over this next matter of months, what price are we going to achieve for oil, and what impact does it have to global inflation? So yes, it's not the sort of news that we were after.
Okay. So, Peter, what happens next? I mean, crude has reacted to the OPEC cut, but
Yeah.
demand is a challenge, which means that in the
Yes.
short term, whatever OPEC wanted to do in terms of arm twisting or production cutting, they've resorted to the last resort. And we can assume that now prices will not go higher because prices have already reacted to the OPEC cut.
Well, that'd be a nice scenario that they don't go higher, but I really feel that what we've seen since Monday morning our time, which it was probably about 4 o'clock in Mumbai AM on Monday, prices went up 3.5% within a matter of an hour or so. We've had nearly a 10% move since Monday. Monday, Tuesday, Wednesday was very strong for WTI, up that 10%. And now you've got WTI at 88, you've got Brent at 93.60, and a US dollar has come off. So it's maybe we're going to see back to that triple digit. I'd hate to think it, but I think it's probably achievable over the next matter of a month.
All right. Peter, hi there. Given the fact that crude oil prices have fallen close now to $80 to $90 a barrel from more than 120 in the month of June, there clearly seem to be those growing fears about the prospects of that global economic recession. Is that clearly warranted at a time like this, and where to for crude oil prices?
Well, I don't think it's warranted. That's the first point, because the consumer is going to be crushed. You've got prices you mentioned down 40%, which is significant. It was a hard landing for producers. That's since that end of June sort of period, and OPEC are adjusting accordingly. So oil has fallen, but it's fallen far more than when you're looking at what the equity markets and other commodities have fallen. So it seemed to be was an accelerator for the crude market, not so much for some of those other markets. Now, where it's running at the moment, we'll see a bounce up. I won't be surprised now to take triple digits out for Brent, but I wouldn't have said that 2 days ago or a day ago if we'd had that 1 million barrel cut.
Right. Peter, great to have you on the show. We'll let you go on that note, and we'll chat again once the World Cup begins.
I look forward to it. Thank you.
Okay.